What we plan to do on this is get you into the home, teach you everything you need to, for real estate professionals, for people looking to buy, for anybody.
Hey, make sure you check us out at the realestateandchillpodcast.com. Buy your real estate merch now. Real estate merch with swag, a brand for hustlers only. Let's go.
Welcome back to the newest episode of the Real Estate and Chill podcast. I'm your host, James Chattery, Financed by James by Instagram, here to help you with all your financing questions and get you into that home.
Kevin Iglesias, Associate Real Estate Broker. Kevin sold my home on all social media platforms. Make sure you follow us, hit the notification bell, subscribe, hit the like button, follow the page as well, Real Estate and Chill podcast on all social media platforms.
If this is your first time tuning into an episode, make sure that you follow us, you keep up to date with us. What we plan to do on this is get you into the home, teach you everything you need to, for real estate professionals, for people looking to buy, for anybody. So follow us, keep up with us, and with that being said, let's get started. Today, topic is, let's talk about the step-by-step guide to getting into your home.
Okay.
A lot of people think it's a lot more stressful than it actually is. Right or wrong?
100%.
The first thing that you need to do is act on what you want to do, right? If you're researching this, if you're coming across the video, if you're watching this video, that means something. Real estate is one of the best investments that you can make throughout your life. In the past 30 years, people have become millionaires over buying their first primary home and just watching the money that they've been making over time, or the equity that they've been building over time, just grow.
Well, we've seen it too, right? Anybody who purchased a house before COVID hit in 2020, their equity skyrocketed.
Correct. So first thing is act on your decision. Reach out to the professionals you need to. Learn everything you need to. You're taking a great first step by watching this clip, right? So the first thing you need to do before you do anything else is speak to a mortgage lender like me and get your financing in check. That is the first step.
Why?
Because you want to make sure that all the numbers make sense. You want to know when you're buying a house, yes, you are purchasing a house for, let's say, $500,000, right? That's not really what you're buying. You're buying the monthly payment, unless you're buying the house cash. If you're taking a mortgage out on that home, you need to be okay with the monthly payments that you're going to be taking out, because that's really what you're buying. Over time, you're going to be paying for the mortgage and the interest that you're taking out on that house. So the monthly payment is the most important factor if you're buying a house right now. Agree or disagree?
I completely agree.
All right.
Step number 2 is talk to a real estate professional, an agent, a broker, associate broker, somebody who has the experience and the knowledge to best guide you. Because let's be honest here, there's so many real estate agents, but some people do it part-time. Some people just dabble here and out. But you want to be able to work with somebody who has the knowledge, who's done this over and over again, and who has a track record with good reviews, right? Correct. They'll give you the information. Because look, it's easy to say, hey, I want this house. I'm pre-approved for $500,000, and they think they can make an offer. But what they don't see on Zillow most of the time is accurate taxes. And if the taxes are too high, they won't be able to afford that monthly payment, right? Like you said before, you're basically shopping for that monthly payment. So always speak to a real estate professional, because what we do is we do our homework to make sure that you can qualify for the house as far as the taxes and everything else. And you and I basically work hand in hand to make this go from point A to point Z. What would be the third step in this whole entire process?
After you speak with your lender, after you speak to your realtor, what you got to do, start looking at homes, right? We've gotten through the part of getting everything ready. Now it's time to go out there and see those houses.
Well, let me ask you this. What are the process steps of getting that pre-approval? Because it's not just a meeting with the bank and that's it. What are the documents that you need?
All right. So what we do is, as a bank, we look for, there's mostly 2 different types of employment, right? There's self-employed borrowers and there's W-2 borrowers. Self-employed borrowers can have, a different array of products, because they can either be, 1099. They could do a lot of different things, right? So for those people who file their taxes in that way, I would need different documentation based off of that. Generally, what I'll need is, for a self-employed borrower, will be a driver's license, last 2 months bank statement showing proof of funds for the down payment and closing costs, the last 2-year personal tax returns, and the last 2 years of all business tax returns. That's what I would need for a self-employed borrower. For a W-2 borrower, what I would need is a driver's license, last 2 months bank statement showing proof of funds for the down payment and closing costs, the last 2 pay stubs and the last 2 year W-2s. What we look for in that is your monthly income. And what we do with your monthly income is we take that monthly income and hedge it against the presented monthly payment that you're going to be having with what's called a debt to income ratio. A debt to income ratio is going to tell us the maximum amount to what you can qualify for, right? So from that number, we find out what the maximum number you can qualify for is. Not that that matters 100%, it might, but it just tells what we can go up to, right? Your monthly payment could be a lot less than what your maximum monthly payment that you would want would be. But that's just what we look out for.
I want to talk about a couple of don'ts that you should not do when purchasing a home, right? Don't allow any inquiries to be made on your credit. Don't be late on any credit card payments. Don't spend money you have set aside for closings, right? Don't buy furniture or appliances. We say this all the time. Don't roll the dice with just any mortgage broker. You want to work with somebody who's experienced, right or wrong?
Correct, 100%. I think that, a lot of people in this market, they don't see it in the same way that we do because we've been around it for so long. But a lot of the times a lot of different lenders are good at different things, right? So like me being a banker and working at a bank, what we do is we fund the money ourselves. So we don't have to wait on anybody else to approve anything or anything like that. We do it all ourselves. And that's a big plus because if you want to get into that house in 3 to 4 weeks, possibly like working with a banker is amazing for that. We can do everything ourselves. We fund everything ourselves. You're working with just me. You're working with my team. You're not speaking to somebody. If you're buying in New York, you're not speaking to somebody in Texas or Colorado to do your loan in New York. The New York market is different. And not everyone can do deals in the New York market and make it a smooth transaction. We are recommended by your real estate agents most likely because we have done transactions with them before. They know how we do business. They know how quickly we can get things done. You got to be competitive on the rate. You got to make sure that you can close quickly. Your customer service has to be amazing. And that's what all I've done in the past 5 years of being in the space.
I completely agree. And I'm going to hit you with some more don'ts, all right, people? Don't co-sign for anyone, right?
Correct.
Don't change your job, quit your job, or retire.
One big thing, do not, if you're planning on buying a home in the next couple of months or whatever, don't go from a W-2 job to a self-employed job and expect to buy a house in 6 months. You can go from a self-employed job to a W-2 job and it'll be fine, but you can't go from a W-2 to a self-employed. The reason why is because we look for 2 years of work history, right? If you just go self-employed, we don't have any way of showing what your income is until, you file taxes and we get everything ready with that. When you're W-2, we can see your income. Self-employed, we can't. We are looking for 2 years of employment income. We're looking for employment history, sorry. We're looking for credit scores, usually above a certain mark, depending on what program you're looking to get into. And then we look for proof of funds for the down payment and closing costs. For down payment, FHA, you can get in with as little as 3.5% of the total purchase price of the house, right? Closing costs generally cost around 4 to 6%. It changes all the time. That's generally where you could be looking, right? I would say if you don't want to finance the closing costs into your loan, you should comfortably have 10% of the purchase price inside your bank account. If you want to finance the closing costs into your loan, you only need the 3.5%.
Sorry, let's slow down, right? Because you may be getting a little bit ahead of some people. What do you mean by financing the closing costs into your mortgage, which we both know is called a seller's concession, right?
Correct.
How that works is, let's say you want to buy a property, right? The property is worth $300,000. Let's just say your closing costs are $20,000. What you would have to do is make that offer and put the $20,000 on top of that, so that property would have to appraise for $320,000. Now, let's say that property doesn't appraise for the $320,000. Let's say it appraises for $310,000. You would have to come out of pocket that extra $10,000 to close. Right. Let's just say that property doesn't appraise for $320,000 at all. Let's say it appraises for $300,000. You would have to come out of pocket those $20,000 in order to close on that deal.
Correct.
So that's
one other thing is the difference between the two loans is vital in these situations.
Yeah.
FHA is a government-backed program. You have the government-backed and then like private companies, right? Government-backed programs are FHA, USDA, VA. These are loans that are backed by the government. The loans that are not backed by the government are typically conventional and non-QM, which is basically, it's called a non-qualified mortgage, which is mostly for self-employed borrowers and investors. Those are privately funded. So with an FHA loan, if you're putting down 3.5%, you could roll all of your closing costs into your loan with the seller's concession, with what Kevin said. For a conventional loan, you can only put in 3% of the closing, of the purchase price as a seller's concession for the loan. The rest of the money you cannot, unless you put down 10%, right? Let's back up a little bit and review that. FHA, you could do something called a 6% seller's concession, which should cover everything. Conventional, you could do 3%, unless you put down 10% or more, then you could do 6%.
Hey, make sure you check us out at therealestatechillpodcast.com. Buy your real estate merch now. Real estate merch with swag. A brand for hustlers only. Let's go!
So that's something to keep in mind.
I wanted to touch base on the VA because there's a lot of veterans out there who are shopping right now for houses as well for the first time. You can borrow up to 4% on the seller's concession.
Correct.
That's the max.
Correct. So you could do 0% out of pocket, and then you could do 4% of the closing costs into your loan.
Yeah.
So,
and with the VA loans, a lot of agents are not educated. So, those loans weren't being accepted at the height of the market, right? Because they're 0% down. You don't have to put any money down if you're a vet.
yeah.
But what a lot of people were doing who were properly guided is they were putting money down, and that money down just went to their closing costs, right? So at least you put some money down on contract when you went to go meet with the attorney and sign those contracts. So there's a lot of loan products out there. And again, you always want to talk to a professional to get more in depth because every situation is different. But yeah, I want to hit one more don't because we get this a lot. Don't make large cash deposits into your account because that's a huge red flag. And correct me if I'm wrong, Jimmy, but the bank always wants to know where that money's coming from, right? That money has to be sourced. And when you have money, it needs to be seasoned for how many days? Months?
Has to be seasoned for, well, depending on the program, but usually around 60 days.
Around 60 days. So don't make any large cash deposits, any money that you have under the mattress, in the walls, hidden in your safe, whatever the case may be. Don't make those large deposits. Speak to somebody like Jimmy who can best guide you and help you in that situation.
Correct. There's, a lot of different things that are needed to be done before you actually buy the house, right? The whole process, yes, you could go into contract and close in 3 to 4 weeks, but everything starts a few months before that. Reach out to us when you're thinking about it. Don't reach out to us when you're like, just wanted to pull the trigger on everything. Reach out to us when you're thinking about it. When in the next year or 6 months, I want to buy a house. Reach out to us at that point, because that's going to be where we can best help you with everything.
You want to be prepared, before you take action on anything.
Right.
So let's say this, all right? Let's say they got their pre-approval, right? We're out shopping for homes. We make an offer. The offer gets accepted. What happens next? I always guide my clients to do a home inspection, no matter what. I don't care if the house is brand new, if it's just been fully renovated. You always want to do a home inspection because what a home inspector comes in there for is to check for foundation, to make sure the walls are properly insulated with that little infrared camera thing that they have, that there's no water damage, termite damage, things that we can't foresee with the naked eye. They've been trained to basically strip down a home and let you know if this is the right move. And then you make that judgment based on the list report that they give you. Right. And this is to protect you as the new purchaser to, make you aware of what you could be walking into. Right. You're not obligated to move forward. Once you get an accepted offer, you're not obligated to move forward. So let's say you do the home inspection. You came out of pocket $500-$600 depending on the size of the home. You're not obligated to say, okay, I still want to move forward. What we can do is negotiate if there's any issues that come up during that home inspection. And if the seller says, no, I'm not willing to do anything, then we try to negotiate down on the price, right, to make up for the repairs. If they still say no, you're not obligated to move forward. You can say, hey, you know what, I'm going to walk. The foundation is caving. The support beams don't look supported. Yep. You're not obligated to do anything, all right? But let's just say everything works out in your favor. Home inspection goes good. They draw up a contract. The seller's attorney draws up the contract. If you're on the buying end, they send that contract over to your attorney. You would have to go sign and put down the down payment the day that you go sign the contract, because a contract with no money down doesn't really hold any weight, right? All right. So once you do that, we would send that contract back to the seller's attorney. The sellers would have to sign, and then that house officially comes off the market as pending or on the contract on Zillow, which then they take that contract and they send it over to you.
Correct. That's where I get started, and that's where I become your best friend for the next couple of weeks. So after that process happens, what we do is we submit your deal, right? When we submit your deal, we get everything ready for the loan to be looked at by an underwriter. An underwriter is somebody who basically approves or denies your loan and says that, all right, everything you did is good, or everything, and we're good to go. Or they could say, it's not good, this won't work, this deal cannot proceed, right? That's probably the most important part of the mortgage process. So once it goes through there, we at that point have ordered an appraisal. An appraisal tells us the value of the home, and we've ordered title. Title tells us if there's any judgments or liens against the property. And that's something that is super important. You want to get a title search. We need one for a mortgage, obviously. You want to make sure that the house is clear, right? So that whole process happens. You know, we're going through the mortgage process. We get the approval letter. We're clearing the appraisal, which basically means we're saying the appraisal is okay. We're saying title's okay. We get some documents from you. We're going to need some, updated bank statements, updated pay stubs, anything that we may need in the process just to close it out. And once we have that whole situation figured out, we submit the file for a clear to close. And once we get the clear to close, we reach back out to everybody and we say, hey, the file is officially clear to close. Let's schedule a closing date.
All right. So then what happens after that is I get contacted, right? We would have to do a final walkthrough. What a final walkthrough is basically we go inspect the house one more time, make sure that the house is in the same condition that it was in once, when we saw it, when we took a tour. And if there's anything that's wrong as far as holes in the sheetrock, or there's any appliances that are not working, et cetera, then I let the attorney know everything that we found during the walkthrough so they can negotiate on your behalf, try to get you some money in return, and try to get these problems fixed. So after that walkthrough, everybody's on board. Everybody is happy. We're going to the closing table. What happens after that, Jimmy? At the closing table.
At the closing table?
At the closing table.
At the closing table, you basically sign for a few hours. No,
a few hours.
That's not that scary, but
it's like an hour and a half, 2 hours max, depending.
It's usually you got to sign a bunch of documents.
And you're signing the same document over and over again.
Yeah. And you're basically you don't care though. At that point, you don't care. You're so excited. You're so happy. You're like, all right, I'm signing. It's not that big of a deal. But once you get through that, there you go. You're officially a homeowner.
The process that we're explaining may seem a little simpler, right? Because this is audio, but when you're going through it, there may be some hiccups, there may be some bumps in the road, some obstacles, but look, it's just part of the journey, right? It's
that's
part
what we're here for.
Yeah, that's what we're here for. We're here to help you and guide you, to hold your hand and let you know that this is all going to work out. But the one thing you want to do is just be completely honest with the people that you're working with, and that's how things get done in this business.
It's great that you said that, because that has to be known. We're your friends. We want to help you.
We're on your side.
We're on your side.
Yeah.
Tell us everything. Tell us what we can help you best if we know the best situation, the whole scenario. So, let us help you, walk you through everything, because if you don't tell us now, we're going to find out. So it's tell us, prepare us, let us know, and we'll help you get there.
So let's touch base on this one last thing, because I feel like this is a question that a lot of first-time homebuyers may be curious about. They lose their down payment for any reason. I know there's always a mortgage clause in the contracts saying that if they deny their mortgage. So let's say for whatever reason they no longer qualify. In that contract, they usually get a mortgage denial, right?
Correct.
In which the bank sends them a letter saying, hey, look, you no longer qualify for the home due to things that were, you didn't see coming, as far as let's say you lose your job for whatever reason, right? You didn't see that coming. And during the process of you getting the mortgage, everything was good. Everything was working out. But all of a sudden you were let go. And that happened a lot during COVID. I mean, I had about 4 or 5 deals that fell apart because people were getting laid off from their job.
Yeah.
And usually essential workers, weren't getting laid off, et cetera. But that's something that you'll see in the contract that you'll get your money back on if it's in the contract, if there's a mortgage clause in there, which check in with your attorney, whoever's representing you, to make sure that they're protecting you at all costs. But yes, that's a form of getting your contract back. However, you cannot say, you know what, I changed my mind. I hate this house. I hate the paint. I hate that Ryan once slept in this room. I no longer want to purchase this home. There's no backing out.
Here's what I'll say on that. If you are purchasing a home, no matter what, unless you're building the home from scratch, you won't love every single part of the house, right? 80% of the house you have to love. 10% of the house you can change. You're going to own the house, right? You can move things. You can change things around. You could do some, renovating on the house. 10% of the house you're going to have to live with. You're never going to get 100% of everything, right? It's very difficult. I can't say never, but it's very difficult to do.
Another thing I want to just say is that, look, you have to be mentally prepared and financially prepared to buy a house, right? Because I've seen so many people who have been pre-approved, but they just get cold feet, right? They do a home inspection, and what they find during the home inspection could be minimal things, but they get cold feet. Oh my gosh, this is a big investment that I'm making. It's a big purchase, one of the biggest purchases in my life. Then they get cold feet. But what happens with that is you spent $500 on a home inspection, right? You go through another one, another $500 on a home inspection. You go through another one. Now we're talking about $1,500 spent on a home inspections that if you were you know what, maybe this is not the right time for me, then you wouldn't have spent that money, right? But so you have to be mentally prepared and financially prepared to move forward on any purchase. I've seen that happen a lot. The significant other is saying, all right, it's our time, and the one significant other is extremely nervous about the whole process. And we see that, a lot in our industry. So make sure that you guys are on the same page, because you don't want to spend money blindly, right? That's money that you could use towards your monthly payment or renovations or closing costs or anything else that your heart desires.
One thing I want to leave you off on is the first house you buy may not be your dream home, but don't always just expect to have your dream home a huge mansion as your first house, right? No. It's not always going to be that way.
I mean, my first house was a starter house too, but I knew all right, I'm only going to spend X amount of years in here, and then once I'm out of here, I'll
move up.
Yep, exactly. So
just keep that in mind. Just want to throw that in to keep that in mind. If you have any questions about anything, even if you're not looking to buy tomorrow, right, reach out to us in advance. I cannot stress that enough. Let us help you with the beginning parts of it. Let us help you get everything ready, so by the time you're ready to move forward, you don't have any worries about anything.
I want to end this off with one thing. I know we're talking about first-time home buyers, but a lot of people have bought a house and then they forget the whole process, right? So let's say they bought a house and then they want to sell that house to buy another house. With that, you still have to get pre-approved. That's the first step, right? Because you don't want to put the house up on the market and then realize oh man, I can't buy another house. Yeah. Because then you're just getting your hopes up and you're wasting literally everybody's time. Right. So again, working with a professional who has the experience, who has the guidance, who has expertise, they'll properly guide you. I've been in these positions multiple times. I've had to do one sale and navigate 3 deals in one. Wow. It's stressful, but we got it done. And that's the point of it matters who you work with. Right. Working with somebody whose experience is always going to work in your benefit. And you, as the buyer, as the client, as the seller, are not obligated to work with anybody you don't want to work with. Make sure that person is looking out for your best interests and not for their pockets, all right? When you work with somebody like myself or Jimmy, we always put you first, right? Our reputation is everything in this business, right? And that's how we get a referral business. Do right by our clients. So again, if you have any other questions, reach out to me or Jimmy. You can find me on all social media platforms. Kevin Sold My Home. Shoot me a message, shoot me a DM, shoot me a text, give me a call. I'm here to help in all your real estate needs.
And reach out to me, Finance by James on Instagram. DM me, let me know. No question is a stupid question. Just reach out to us.
We're here to help.
We're here to help you. And that was the latest episode of the Real Estate and Chill podcast. Make sure to like, comment, subscribe.
Share this episode with somebody that is thinking of buying or is in the process or, needs a second opinion, because that's what we're here for as well.
Exactly. All right. That was the latest episode of the Real Estate and Chill podcast. We will see you next time.
Thank you for tuning in to the Real Estate and Chill podcast with James Chaudhry and Kevin Iglesias. Don't forget to like, comment, and subscribe. Also, share this with your friends, your No, seriously. This podcast is so fucking good. You might want to tell your ex. See you next time.